Welcome to the deep dive. If you're here, you're looking for that shortcut to being well-informed, and today we are going deep into a very specialized world, the world of technical analysis. We're going to let the indicators do all the talking.
That's right. We are doing a deep dive on the technical profile of just one stock, Ondas Holdings Inc., ticker ONDS.
And this isn't about, their latest quarterly report or some future revenue projection. This is strictly about the mechanics. The supply and demand you can see right there in the charts. What is the market momentum telling us right now?
And just to ground the conversation, ONDS is currently trading around $4.33. It's seen a small recent gain of just under 2%.
Okay, so we have a full technical analysis package here, and our job today is to be your guides, really cut through the jargon. We want to unpack exactly why all this data leads to a very specific conclusion.
And that conclusion is, well, the report gives ONDS an overall technical score of 65.44, which is quite strong. But the real takeaway right at the top for you is this. The sentiment is classified as explicitly bullish.
Bullish. And that's for both the short-term and the long-term outlooks, right?
Both. And our mission today is to figure out how these indicators, the ADX, the OBV, the RSI, how they all work together to create such a firm, bullish conviction, while also, flagging the necessary points of caution.
Okay, let's unpack that. If we're starting with the strong bullish conclusion, the first piece of the puzzle has to be the trend itself. Is this a reliable, established move, or is it just market noise? How do we even measure the strength of this upward direction?
Well, the first place we look is the Average Directional Index, or ADX. It's probably the most reliable tool we have for filtering out that market chatter and just determining if a trend, up or down, has real conviction behind it.
So it doesn't tell you where it's going, just how hard it's trying to get there.
Exactly. It's about the strength of the move, not the direction.
And what's the reading here? Because I know that number is everything.
The ADX is reading 40.60. Now, for context, most traders agree that any reading above 25 signifies a pretty strong trend.
Right. 25 is the line in the sand.
It is. But when you cross the 40 mark, the upward direction isn't just strong. It's what we'd call well-established. Think of it like this. 25 is when the engine starts humming. 40 is when the trend is cruising on the highway, well past being some temporary fluke.
So that 40.60 tells us the bullish momentum is real. It's got energy.
It has energy, and it likely has enough to continue unless something fundamental really shifts. It gives you a high level of confidence that the current direction is, well, the path of least resistance.
That sounds incredible, a high conviction trend. But that brings up a really critical question for me, and I'm sure for you listening. If the trend is that strong, if the momentum is that powerful, why is the stock only sitting at $4.33? The 52-week high was way up at $7.82.
That's a crucial observation.
Isn't this strength a little misleading if we're still so far from that peak?
It's a fair question. The ADX measures the strength of the current move, not its absolute level compared to the past. What we're seeing is a very committed recovery. So the upward strength is focused on reversing that previous downward slide. The strength is real, but the job isn't finished yet.
Okay, so the ADX gives us the strength. Now let's look for the visible confirmation. The thing even a novice could spot on a chart, and that usually comes from the moving averages, the MAs.
Precisely. The simple moving averages, or SMAs, they're like seeing your headlights perfectly lined up on the road. We use three main ones to judge the health across different time horizons.
The 20-day for short-term, 50 for medium, and the big one, the 200-day for the long-term trend.
Exactly. And the current price, that $4.33, is trading comfortably above all of them. The short-term SMA 20 is at $4.35. The medium-term SMA 50 is down at $3.65. And critically, the long-term SMA 200 is at $3.87.
So it's cleared every single one. That alignment is what we'd call a clean sweep.
It really is. A price trading above the 200-day is the classic signal that the long-term structure is improving, maybe even reversing to bullish. And since the price is above the 20, 50, and 200, it confirms this isn't just a short-term blip, it's locking in across all time frames. It just reinforces that ADX reading perfectly.
All right, so the map shows a clear highway. The car has plenty of power. Now we need to look under the hood for signals that tell us this momentum is actually sustainable. And that brings us to the indicators that generate those concrete buy or sell flags. And the first one that just screams out from the page is the MACD, the moving average convergence divergence.
A classic.
It's generating a textbook, clear buy signal right now. Can you explain what that little cross actually means for someone listening?
Sure. The MACD looks at the relationship between two different moving averages of the price. When the faster MACD line crosses above the slower signal line, It tells you momentum is accelerating, and that's your buy signal.
And for ONDS?
For ONDS, the MACD line is at 0.14, and it's positioned above its signal line, which is at 0.10.
So that little gap, that's the key.
That small gap confirms that the rate of change is accelerating to the upside. So we have established strength, and we have accelerating momentum. It's a very solid picture so far.
But here's where it gets really interesting. And this is a critical insight for you into the quality of this buying. We have to talk about volume. Because if you just looked at the simple volume data, you might be confused.
You would be, yes.
The report says the relative volume over the last 10 days is low. It's at 0.62.
Right.
That means trading is only at 62% of its recent average. Now, low volume during an up move, that can sometimes suggest weakness, right? A lack of conviction. So why isn't this low volume a red flag?
Because we have to distinguish between high total activity and high quality activity.
Yeah.
And that's why we bring in the on-balance volume, or OBV.
The OBV.
It's one of the most powerful and honestly often overlooked volume indicators. The OBV is designed to measure if volume is flowing more into the up days or the down days. And even with that low 0.62 relative volume, so overall activity is quiet, the OBV is unequivocally rising. And a rising OBV indicates what we call accumulation.
Accumulation, that's a fantastic term. And that's the key nugget right there for the listener.
It is. Think of the OBV like a net. Even if total trading volume is low, maybe it's lunchtime, maybe the big news has died down, the net is catching mostly buying orders.
Just smart money.
It implies that smart money, or institutional players, are maybe quietly filling a big order, just steadily accumulating shares without making a big fuss or creating massive volume spikes. The buying pressure is dominant even during these quieter periods.
That quiet consistency is so much more powerful than a sudden one-off spike. It suggests real conviction.
It does.
Okay, so let's recap the strengths here. We have an established strong trend from the ADX. We have visual proof with the price above all the SMAs, a clear signal from the APD buy, and now quiet but powerful institutional accumulation from the rising OBV.
It's a powerhouse of technical positives.
And is there any final confirmation of that dominance?
There is. You can look at the Arun indicator. It basically measures how recently the price has made a new high or new low. The Arun up is way up there, 92.86, while the Arun down is lagging far behind at 35.71.
So it's not even close.
Not at all. When the Arun up is near 100 and the Arun down is that much lower, it's just a technical declaration that new highs are being made frequently and consistently. The bears just haven't been able to make a dent. It adds another layer to that dominance picture.
So far, this profile is just overwhelmingly strong, but technical analysis always provides the balance, right? The gas pedal is floored, but we have to check the temperature gauge.
You have to.
And the report is very clear that while the trend is strong, the stock is becoming somewhat overextended in the short term. We've all seen stocks burn out after a run like this. Let's talk about the indicators that act like a speed limit sign, warning us about potential exhaustion.
There are two main ones screaming caution here. The first is the Relative Strength Index, the RSI 14. It measures the speed and change of price moves.
And the magic number is 70 for overbought.
Right. The traditional threshold is 70.0. For ONDS, the RSI is sitting at 68.61. So it's not officially overbought yet, but it's classified as approaching overbought.
It's knocking on the door.
It's knocking on the door. It means the price has risen so fast that the market is rapidly absorbing all that buying pressure. It only needs a small push to cross that 70 line, which often comes right before a temporary pullback or some consolidation.
So the RSI is at the door. What about the second indicator? Because my notes say that one is already fully in the danger zone.
That would be the Commodity Channel Index, or CCI 20. While the RSI is approaching 70, the CCI is reading 110.9.
Way over.
Way over. The moment the CCI crosses the plus 100 mark, which it clearly has, the stock enters what we call bullish overbought territory. The CCI measures how far the price has deviated from its statistical average. A reading over 100 implies the speed of the recent move has been excessive compared to its normal pattern. It strongly suggests the momentum might be due for a pause.
So the overarching signal is buy, buy, buy. But the immediate momentum is saying, hang on, maybe take a breath before the next leg up.
That's a great way to put it.
And adding to that mix, the report categorizes the stock's overall price action as high volatility.
And we can see that tension visually by looking at the Bollinger Bands. These bands create a channel based on volatility.
Yeah.
Right now, the stock is trading right up near the upper band, which is at $4.46.
And that's a double-edged sword, isn't it?
It is. In a strong bullish trend, you actually want to see the price hugging that upper band. It shows momentum is constantly challenging the highs. But when you combine it with those overbought signals from the RSI and CCI, it just reinforces this idea of short-term overextension. It's hitting the technical ceiling of its current channel, and that often precedes a small move back toward the middle.
Okay, this gives us a really complete picture of momentum. We got the strength, the signals, but also this immediate risk of overextension. So now we need to ground that $4.33 up price in context. For those of you watching this tick by tick, these are your immediate goalposts for the day. We're talking pivot points. The stock is currently trading above its central pivot point, P, which is at $4.25. And staying above the pivot usually means the intraday strength is positive.
And that defines the immediate action you should be watching. If the price does hit some selling pressure, that first line of defense, the immediate support S1, is down at $4.15.
And on the upside.
And that accumulation continues and it just powers through this exhaustion. The first hurdle it needs to clear is the immediate resistance, R1, at $4.38.
So breaking R1 would be a big deal.
A very big deal. Overcoming R1 would signal that the short-term resistance is broken, and it would suggest the next leg of the bullish move is starting, maybe even ignoring those overbought signals for a bit longer.
Now, if we step back from the pivots, what does this all mean in a broader context? Let's bring back that massive 52-week price context we touched on.
Right.
The high for the year was $7.82. The low was a dramatically lower 84 cents.
That range is just enormous, and it's a testament to that high volatility we noted. But here is the most fascinating detail of all, the one that really synthesizes the whole contradiction in this profile.
Okay.
The stock's current price of $4.33, it sits precisely in the middle of that vast range. The report confirms the stock's 52-week position is exactly 50.00%.
50%. Dead center. That's an almost perfect technical balance point for the entire year.
It is. And that 50% position creates the core tension that we need to leave you with. It's what makes this stock so technically interesting right now.
Go on.
On one hand, you have an extremely strong, well-established bullish trend. It's backed by an ADX over 40, that clean moving average alignment, the MACD buy signals. The market is clearly accumulating shares.
Total commitment.
Total commitment. But simultaneously, the stock is showing those definite signs of short-term exhaustion. The RSI is approaching overbought. The CCI is already deep in overbought territory.
The powerful engine is tired and might need a rest.
Exactly.
What a contradictory picture. The strength is undeniable, but the warning signs are blinking red. And that brings us right back to that 50% position. What does it imply when a stock, despite having such powerful momentum and all this quiet accumulation, is sitting precisely in the dead center of its yearly trading range?
It's a great question.
It suggests that a really significant distance remains between where we are now and those previous highs of $7.82. The fact that the stock is moving with such conviction, yet it's still only at the halfway point, it shows the market consensus hasn't fully recovered yet, even with this bullish frenzy. That 50% position is a powerful reminder that there is still a long, long path ahead, even while the technicals are screaming positive right now. And that's something for you to mull over on your own.